Yeah, I know you're thinking a lot about these stocks given what's happened in the markets of late. Tell me what's top of mind.
Yeah, it's a pretty complex situation. I mean, how much has the world changed since I was last here, like a month ago? But there are kind of two camps out there, and I fall a little bit on one side of the camp. There are people who think this thing is all about an inevitable correction. Hey, the market has recently corrected. I was watching you earlier. There's a guy that says, hey, this is the run-of-the-mill correction, right? So you have that camp. And then there's a whole different camp. I think this is a part of a long-term shift in valuations. Look, to me, I really see this as like a wolf by the ears type situation where you have revenue growth and earnings in tech that create this enormous valuation creep. And then you have inflation and the economy and all the geopolitical tensions that can't sustain it. Ultimately, I think tech earnings growth will win, but it's a very complex situation.
But when you look at the historical averages of PEs relative to where they are now, do you look at the space and say, even though I believe what you just said, valuations just got ahead of themselves, or does this all make sense to you relative to where AI is going?
It makes sense relative to where AI is going because you can't look at PE alone. You have to look at earnings growth. You have these big tech companies doing the type of earnings CAGR that you see in the private markets, where we see those valuations and those PEs all the time, right? So if you just isolate PEs in a normalized environment, you're correct. But when you look at stuff like NVIDIA and the big tech companies out there, they're growing like wildfire, and it's all being fueled by this AI trade.
What about spending versus return on that investment?
Yeah, so that's actually a good point. And I was thinking about this with Uber and Lyft, which I hope we get a chance to talk about as well. But you have to spend. This is from the playbook of the private markets. We in the venture capital community care more about dominating an industry and being the number one or number two player in a growing industry, where then you can expand and increase margins and become profitable later, but you want to crush all your competitors. Right now, there's a gold rush for AI. You can sit and focus on quarterly profitability, or you can double down on your technology and be the leader of a massive industry. And I think all of the big tech companies are definitely spending, but as a publicly traded company, quarter by quarter, it's a very delicate balance.
Oh, but don't you have to get ROI? I mean, it can't be infinite that you can just spend until you feel like it. And at some point, you need to be rewarded with a return on that investment, no?
Yeah, I think we're already being rewarded with a return on the investment. A lot of people don't realize, but AI is already completely infiltrated our entire world, right? Siri is an AI component that we've been using for years. So those who don't have AI are going to be punished. Those who do have it are just going to keep up. Those who lead it are going to dominate.
Let's talk about Uber because it's a standout, and we can show the stock today, which is reacting on the back of its earnings report. What stands out the most to you about this report and about the move? I mean, the stock is certainly off its best levels that it had recently reached, in large part because the prior earnings report was a surprising negative.
Yeah. So I was an early investor in Lyft. So I've been a Lyft fan from the beginning, and I'm actually looking at Uber like, okay, now is our time. But I really hope the market gives Lyft enough patience to allow them to steal a little more market share from Uber, and then Lyft can do what Uber did, which is increase their prices, increase their take rate, and just completely flip that switch on profitability, just like Uber did. So Uber executed the playbook masterfully. They had enough market share, brand recognition, you're a dominant player. They increased their take rate, they increased their prices. If you open your Uber and Lyft app right now, you're probably 30% higher for the same trip to use Uber. No one cares, because now Uber is the word. It is the dominant player, right? So they can do whatever they want to do. And I'm hoping Lyft can gain a little market share now that they're a little cheaper.